Hello traders, welcome to a questions and answers session here. This is the second question that I read through that was asked directly of me, and they asked me to how would I process this chart. So let's get through the questions and then let's get to the chart and dissect the chart further. This is Derp, a new member. He writes, "Hi Damien, I get confused pretty often with this scenario, but I would appreciate if you could clear it up for me. But how would you approach this chart? Would you take a short on the big swing, or would you continue playing the smaller swings inside of it? The big swing indicates taking a short position, but the small swings in there indicate taking a long. Now I understand the big swing will probably take precedence over the small swings inside of it, but after plotting my fibs, they are sort of aligned, where I am not sure if I should look for a long or a short. Also, since the big swing, um, since on the big swing, this is sort of a deep correction near the 78%, that would indicate weakness on the short side for the bigger swing. All right, so a couple of questions here. Would I take a short or would I take a long? And the answer to that question, Derp, is what order flow are you trading? Okay, you need to first define what order flow it is that you're trading. You must also understand that there is always going to be something on a larger scale order flow, on a more immediate order flow, that may be in conflict, okay, with the order flow that you're looking for to participate in. And the short answer to that is don't worry about that. All order flows lead to the same point and place, okay, eventually. Okay? So don't be concerned about those things, okay? Can we use confluence of smaller order flows to help us, position ourselves into an entry on the order flow that we're looking at? And the answer to that question is absolutely. I do it all the time, okay? But I don't want you to get into a habit of, this is doing this, I'm trading this, and then when it gets to a certain point, I'm going to trade the longer term order flow, okay? Because if you're an intraday trader, does your trade support intraday range, I should say? What I mean by that is if your trade on an intraday standpoint, and this is a larger swing that took days to materialize, or price is moving very slow, and you get into a short there with the expectation the market's going to make a new structural low, is that likely to happen within your trading session? Okay, do you have the margin requirements to hold that trade over hours? Okay, and is that considered an intraday trade? Okay, so first define yourself as what kind of a trader am I, and then align yourself with that order flow and use the other order flows to help you find confluence to support, okay, you taking on the risk in the areas of interest that you identify. So let's get to the chart, okay, and start depicting this. Right off the bat, I see what appears to be a bat pattern here that reacted very nicely. And then we have price coming down to make a really, really good projection to the downside. Momentum is pretty decent. Anything that's around 45 degrees or greater, it's a healthy, it's a sign of health from a momentum standpoint. But remember, you just, in one of your questions, you said, price corrected to the 78.6. Will that indicate weakness? Well, here you have a bat, right? The bat usually completes at the 161 of this swing, or at the 88% of the XA leg. So if that's the case, look at what happened after that. That was a very deep correction, right? And look how price reacted. So don't be too concerned about if price corrects deep, that is weakness. In theory, it is weakness, okay? But the expectation is the expectation, okay? Those deep corrections offer you really great risk reward, okay? So is there a weakness on these deep corrections? Yes. But does the trade also help you by taking on less risk in those areas? Yes. So if the trade is going to fail, you're going to take a loss, but it's going to be a smaller loss anyway than if you were to take the trade at the 50 or the 38%, where it would be a sign of strength there. So don't be too concerned about, these deep corrections have a higher probability of failing, because they actually don't, okay? there are other elements, okay, being patterns, harmonic structures that play a role whether these areas are going to hold or fail ultimately, okay. The next point is, what order flow are you capitalizing from, okay. You've identified this bat, okay. I believe it's a bat, I can't see the rest of it, but you identify this. If that is the order flow that you're highlighting and you're looking to trade this, okay, then you're looking at the clear longer term here, order flow, okay, and you have a complex correction that terminates somewhere in this area. This is a great area to get short, okay. And why is that? Well, because you have an expectation of an overall new structure low, you have a complex correction ABCD pattern that ends up here, and you got great structure, okay. So your risk goes above the main swing and you're targeting these areas down here. So what else could you do here from a trade management standpoint to help you more stay on an intraday type of mentality or strategy? Okay, there's two ways that you can manage this trade that offers you some options. One is get aggressively short up here, okay, because that's the order flow that seems to me you're identifying, okay. So this is the trade that you should take, whether it's intraday or not. It doesn't look like it's an intraday swing, but that is the expectation, and it looks like that's what you're looking to trade, okay. So if that's the case, you would get short here and you have an ABCD pattern. So what you can do is you can get at the 38, this you would extend down here, okay, and once you get to the 38% of that pattern, you will get to a break even, okay. And then once price gets past these lows here, okay, and starts working towards achieving this, you can lock in at the 618, okay, of the pattern. So what did you accomplish here? Now you locked in what the pattern achieved in case price does find support ultimately and come back up, and you protected yourself against the shorter term order flow that looks like wants to head up again, okay. So to answer your question is that you can get short here and protect yourself, so if price does take a bounce somewhere in these lower areas, you're protected, okay. But that is the order flow that you're trading, and you have the vision and you have the vision to understand that the shorter term order flow has not turned bearish yet, has not failed, so you do not have the alignment, okay. But that does not mean that because you do not have the alignment, you don't take your trade, okay. You still have to take the trades that fit your trade plan, okay. We're not here to filter out our trade plan, okay. Why in the world would you ever filter out your trade plan when your trade plan has proven to you through your testing that it has a positive expectancy? Okay, so filtering out your trade plan is like wanting to lose, okay, and we don't do that. We're not in the habit of doing that. You could take on a bunch of losses, it does not matter. You keep following your trade plan and you are already on the path to recovery. You're already going to achieve recovery if you implement all of the elements that allow you to live to fight another day, which is your discipline, following your trade plan, and money management, okay. Other things that you can do here. Let's say that you were looking to get short here, but you're not sure if this market is going to continue higher or not because the immediate order flow has a expectation to have a higher low and then a new structure high, okay. One of the things that you can do is wait for realignment of the order flows, but that puts you at a huge disadvantage, and I'm going to tell you why now. So if I'm not sure whether I want to get short here or long here, means one, I don't know what order flow I'm trading, okay, and that needs to be corrected immediately. Secondly, if I'm trading the longer term order flow and I'm looking for short, but the immediate order flow is not aligned, I could wait for that realignment, meaning that you could wait for price to come, get below this, confirm, okay, with an expectation failure, and then wait for the correction, okay. But that's probably going to get you short somewhere in this area, okay, as opposed to getting aggressively short here, right, with better risk reward and giving yourself options, because the options that you have are very simple, okay. You have a decompletion here and a point where the sellers may come in to achieve the overall expectation. You have an SOS 3 signal here, very powerful, very strong, and the one thing that you can do to help you counter that possibility of price finding support and making a new structure high is getting short there, okay, getting to the break even at the 38 of the pattern, and once price gets down into this area, clears these lows, lock in at the 618, and now you've achieved the best of both worlds, okay. Now if price does find support and tries to shoot up for that new structure high, you're protected, on the immediate order flow, and you've made some money. Okay, and then you can always re-enter again depending on what price does after that. Okay, but you have to be clear, because this right here, should I go short here or long here, tells me that you haven't defined the order flow that you're looking to trade. Okay, so be clear on your order flow. Try not to commingle them. Okay, and don't stop trading longs, on the order flow that you're trading because it lines up with something that may be happening on the longer term. Remember, expectations fail on the longer term too. So this may be, okay, the beginning movement in a shorter term order flow is going to make this expectation fail. We just don't know which ones are going to fail, which ones are going to succeed. Okay, but by taking all of them possible, that's what ends up not mattering, or what I'm sorry, that's what makes it not matter, when they fail or not, because you're taking them all. So because you're taking them all or almost all, you're staying on that side of the equation of the expectancy that has more of them playing out than not. Okay, now you have a measurable outcome with a few outliers because price just didn't correct to your area of interest, or because price did not trigger you an entry on a rotation or whatever you use to pull that trigger. Okay, that should be far and few between. Okay, meaning that if you had 5 signals and you only took one, there's a serious problem with you following your trade plan. Okay, you're now gambling because now you're trying to filter out trades that are in your trade plan. So why would you ever do that? Why would you filter out something that shows you that you will remain consistently profitable if you follow it? Okay, that's why I don't understand people trying to filter out their trade plan because they took a loss yesterday, or they've been taking losses, pretty close together in these last couple of weeks. That's okay. There's nothing wrong with that. That's why you have money management. That's why you have discipline, and that's why you have a trade plan. Okay, your job is to keep executing, and the recovery efforts already on the way, and not only are they on the way, the recovery is assured as long as you follow those components. Okay, so it's just a matter of just keep executing, be clear on what order flow you're trading, and don't stop trading because something is in conflict with your order flow expectation, because at the end of the day they're all going to lead you to the same place. Okay, so I hope that answers the question. So it's a short Q&A, but I thought it was important to make a nice little video on this. Guys, find an order flow that you can keep up with, that fits your trading personality, that fits the hours that you're sitting in front of the screen, and gives you the frequency that you need to compete and to stay profitable, and follow that order flow. Okay, and don't worry about the other ones. Okay, there's always going to be something larger or smaller that's in conflict with you, but by you staying true to your order flow, all those things are going to sort themselves out as they all end up in the same place. Okay, no matter what order flow you followed here, long, short, whatever, they all took you to here. No matter what order flow you followed, they all took you to here. No matter what order flow you followed, they all took you to here. The more immediate order flows are going to fail more, and they're also going to succeed more. It's just a matter of more frequency. The intraday is going to be the happy medium, right? And the longer term order flow appears to fail less, but only because you have less frequency, and 70% of less frequency appears to be more winners. It's relative, all in the same. They all lead you to the same place. You just need to find one and hold yourself accountable to that order flow no matter what. Trade it until it fails, and then go in the next direction that it tells you to go. You keep doing that and you will stay profitable. It's only a matter of time. Okay, the only way you're going to lose is if you start doubling down, or if you start filtering out trades, or you start not following your trade management rules. All of these rules, okay, allow for your money management system to stay efficient, okay, and to help you overcome those barriers. Okay, it's what's going to allow you to not have those emotional demons interfere with your process and decision making. Super, super, super important. Okay, look at our small account. Okay, we've been struggling a little bit here. Do I care? No. Do I look concerned? No. Do I keep saying the same thing over and over and over again? Yes, because I know what the outcome is going to be as long as I follow my trade plan. Okay, we all get stuck in the mud every now and then, but we can't let that mud turn into quicksand. We can't let that be the catalyst for derailment. Okay, We can't let that be the reason that causes us to jump off a bridge, okay? On the contrary, all the more reasons to dig in and ground yourself to your trade plan, ground yourself to your money management, and stay on top of your discipline, because it is the only way you're going to overcome these challenges. It is the only way you're going to recover your account, okay? Nothing needs to change. Nothing needs to be optimized, okay? You need to optimize yourself to trade your trade plan, okay? Make sure that is home place and everything is going to be okay, okay? So, my friend, pick an order flow. It doesn't look like you really picked one, okay? You should know exactly, okay, where your next trade area is, always, okay? You need to stay on the right side of price, okay? Meaning that if I'm looking for a trade and the smaller term order flow has made a new structure high, where I'm looking for longs, okay? If I'm trading this order flow, I need to be looking for shorts. Where is my area of interest? Is it here? Is it there? Where is it? You need to identify this ahead of time so that you're not chasing price. When you're asking me if you should trade short here or long here, how would I process this chart? Okay, I understand you're a new member, okay, but it tells me that you're chasing price around, okay? You need to stop doing that. You need to let price come to you. You need to have your area of interest worked out ahead of time and not worrying once price is already there if you're going to go short or long, okay? That state of confusion tells me that your process needs to be cleaned up and polished a little bit. So stay true to one order flow, trade that order flow without fail as best as you can, and everything else is going to sort itself out. Stay disciplined, follow your trade plan, deploy money management when needed, up or down, and you should be able to survive. Okay, I think that's all I have on this. You know, again, it's a little hard for me to answer this question or this question because I don't know what order flow you're looking to capitalize on, and it looks like you may not either because of you're asking whether you should go short here or long here. Okay, I definitely would not be looking for a long here, and why is that? Okay, well, number one, the market is expected to go lower long term, right? We do have an ABCD completion, right? This is the break even of the pattern. This is the first level where price may find some, well, it's not, this is not the right area because you have to extend this down, which will bring the 38 to somewhere around here, okay? Usually the 38% comes in and around some area of first structure, and the 618 comes in at, you know, around this area. That's the way it usually works out. So this will be a very, very shallow correction, and your stop at minimum, if you're trading this shorter term order flow, goes all the way up here, okay? Just because you have an overall expected move to the downside, you also have a pattern completion. All these things should have you having a basic expectation of the market correcting deep here. Yeah, so expecting a deep correction, you should tell yourself, this is not an area of interest that I'm looking to consider, first of all. And secondly, if you look left, there's been no good buying from that level. There's a little attempt around here that really went nowhere, and the better area was down here where price did have a better response to that area. Okay, so you know that's the other thing, is that would I be looking for long here? No. What is my area? What would be my area of interest, considering that I'm expecting a deep correction, considering that this may be an area where this longer term expectation may play out, where there's ratio and harmonic exhaustion here, where there's a pattern completing here. All these things have a lot of confluence for price to correct deep on me. Okay, so at the very least, I will be looking to get long where? At the 618 of the pattern, maybe somewhere around the 50% of the pattern. That would signify that would indicate to me that that would be reasonable for price to achieve. The sellers have been pretty good about, you know, defending some of their areas. They haven't capitalized overall. But those are the things that you have to ask yourself. And it's not a matter of filtering out this entry here, but this entry here offers a very poor trading opportunity from the simple fact that the market is likely to push lower here than it is to, from here, find support and go up. Can it do it? Absolutely it can. Okay. But everything that I see here would indicate to me that if I were looking for a long on this order flow, I would be looking for a long somewhere where there was a better buying footprint down here. bringing that across into this general area. It will also be consistent with my general expectation of a deep correction. Okay, so all of these things play a role, okay, in your decision making. But before you can answer any of these questions, you have to ask yourself, what is it that I'm trading? What case am I building for entry? What are the parameters of my trade or the trade that I'm looking at? All of that needs to be worked out ahead of time so that you're not chasing after price and you're not being reactionary. It's just a matter of waiting for price to come to you, confirming your analysis, seeing your entry trigger, and boom, taking the trade with confidence. Okay, and then following your rules. Okay, there should be little to no mystery on the chart as to where you're looking for a trading opportunity. There should be little to no mystery for you as to where price is heading in the next couple of swings, because you have the next two expectations already identified. Meaning that once price breaks a new structure high, what are you expecting? What are two expectations are you expecting from that? Another higher low and another new structure high, right? Those are your two expectations you have already planned out for price to achieve. They may be shallow, they may be deep, or they may fail. One or two may fail. We don't know, but we have that basic expectation. But by having those two expectations gives you a pretty good insight as to where you should be looking for those higher lows, or into what area that new structure high may be coming into to take a D entry. New structure highs usually offer D entries. Okay, higher lows usually offer aggressive C buys or sells. Okay, those are things that are just facts. Okay, so knowing all this ahead of time puts you at an advantage, right? It puts you on the side of, I know what I'm looking for. I know what price is likely going to do, and because of that, I can position myself in a way to capitalize from that. Why? Because I know that price usually does that more than it doesn't, and by aligning myself with those probabilities, I'm going to be profitable. I may not be profitable this trade, I may not be profitable the next 10 trades, but ultimately I will be profitable. Okay, and that is the takeaway from this example. Stay true to an order flow. Trade it religiously, aggressively. Okay, do not take any crap from the market. Do not filter out any trades. Do not stop trading because a longer term order flow says otherwise. Do not stop trading your order flow because a short-term order flow says otherwise. Use a short-term order flow for confluence. What would that look like here? Let's say you're trading the long-term order flow here, and this is just, shorter-term order flow, right? That has an ABCD completion. Okay, that D point is your confluence. ABCD completion could have been another Garley or BAT or whatever that completed within that. Okay, and that offers you what? The confluence you need to have a really high probability area of exhaustion that offers you a great trading opportunity into your overall expectation. Okay, does that mean that you cannot capitalize on the short-term order flow too? No, you can protect your trade on the rules of a pattern that's within that main swing, so that you don't walk away with anything if that fails. Okay, but if your order flow has you making a new structure low, don't cut yourself short, and don't cut your trade short because the immediate order flow produced something and you're managing your trade on the immediate order flow. No, notice I didn't say I'm taking profit at the 618, and I'm not locking it at the 618 at the test of the 618. No, I'm looking for the 38% of the pattern to break even if you so choose to. Okay, I don't do that. I wait for the 618. At the 618 of the pattern, I get to a break even and I stay there. Okay, and then once price tests the low here, where I would normally be getting to a break even on the longer term order flow, whatever order flow I would trade, then I will lock in at the 618. So the 618 triggers a break even, and the test of the low where I would normally get to a break even is where I lock in at the 618. It's unlikely the price is going to come all the way back up there. And if it does, that's fantastic. You took the profit and you gave yourself an opportunity to re-enter in the longer term order flow. Best of both worlds. Okay? But you can't be wishy-washy on that, and you've got to have clear rules, because otherwise you have an immeasurable outcome, and that's what we need to get away from. We need to get away from immeasurable outcomes. Those are bad, okay? That only adds intensity and fuel to the emotional demons, okay? But when you have something that you've measured the outcome with, you know has a positive expectancy, and you follow it, then nothing else matters. It's just a matter of repetition, okay? that's all I have for this session. I believe it was a good question. I believe that we covered a lot of things that are important about order flow and understanding the dynamics of the order flow and how you can use confluence of order flows. We also talked about the importance of staying true to an order flow. You need to identify one and trade it and forget about what the other order flows are telling you. If anything, use the shorter term order flow to help you find confluence, which we did here. Um, but you also need to understand that if you're an intraday trader and you're looking for this huge, is that an intraday trade? Is it realistic to expect the market to, complete that trade within your trading session? If it's not, then you're on the wrong order flow. Okay. And if you want to just take the chance because the chance is there and you have amazing risk reward, that's fine. Now, next question is, do you have, okay, the margin requirements to hold that trade past extended hours? Okay. So keep all those things in mind. Stay true to an order flow. Stay true to the order flow that fits your account profile, that fits your personality and emotional tolerance, so that you don't take on excess risk and intensify that fear demon. Okay. Thank you very much for the time. This video, I hope to make more of these. I think they have tremendous value, and I'll keep looking out for questions to present in this format. Thank you very much, and I'll see you guys soon.